Assalamu alaikum, second year commerce. How are you? I hope you all are fine. I'm your teacher Asma Nadeen. We were revising the chapter Central Bank, and the topic which we were revising is credit control methods or instruments of monetary policy. In the last class, we discussed the first method, that is a quantitative method, change in bank rate policy or rediscounting rate. Today we are going to discuss open market operation OMO. So second year commerce, this is the second method, quantitative method of controlling credit in the country. For example, commercial banks are giving too much loan, then what practice central bank will adopt to stop all commercial banks to giving loan? If commercial banks are not giving loan because of not having money with them, then what tactics central bank will adopt to let all commercial banks to give loan? So OMO, open market operation, as we discussed in the old chapters, that central bank never deal with public living in the country. So they never deal directly, but OMO is one of the operation of central bank where central bank sells or purchase government securities in the open market. It means directly to the public with the help of commercial banks. Government securities, we know the government securities are bonds. What will happen when central bank will sell or when central bank will take back its securities? So we will see both situations. If the central bank finds that commercial banks are advancing excessive loan, which creates inflation. We studied in the previous topics that whenever commercial bank advance excessive loan to businessmen, it brings the situation of inflation in the country. To control inflation, central bank advise or instruct all commercial bank through quantitative or maybe qualitative method not to advance loans. To remove inflation, the central bank sells the government securities, bonds in open market. Buyer will make the payment via commercial bank. Now before discussing the result, I want you to look this slide, inflation side. What is the objective of central bank? To control inflation in the country. So what central bank will do? Central bank will sell the bonds into the public, to individual, to companies, general public through commercial banks. So when central bank will sell the bonds to the individual and companies, of course they will make the payments from commercial bank to central bank. So money supply in the country will reduce with this strategy. People will make the payment to commercial bank and commercial bank will make the payment to central bank. So in the economy, what will result? Low money supply. So commercial bank will having less money with them or low money with them. So this way credit will contract in the country. In open market operation, when central bank will sell the bonds, this arrow going down, bonds means selling the bonds through commercial bank to the individuals. So this will lead to credit contraction. This is the selling. Simultaneously, when central bank wants to expand the credit, what central bank will do? Central bank, now look, bond is going back to central bank, coming back to central bank. Central bank will take the bonds back and make the payment to commercial bank. So now commercial bank having high money supply. So in this situation, commercial banks will now able to give loans to businessmen, companies. So credit will expand. In this way, the resources of commercial bank will go down. When central bank will sell the bonds, resources of bank will go down and they will advance less loans and ultimately credit will contract. Accordingly, inflation will be controlled. In OMO operation, open market operation, when there is an inflation in the country, and to control the inflation, central banks sell the bonds into the market. Selling the bonds into the market will contract the credit and ultimately the prices in the market will come down and inflation will be controlled. Vice versa, on the other hand, if there is deflation in the economy, central bank will purchase the government securities to control deflation. So the monetary base of the commercial bank, monetary base means the money supply with the commercial bank will increase, and they are in the situation to give more advancing loan power will increase of commercial bank. So as the result, output, income, employment will be more in the country. The third quantitative method of controlling credit in the country is changes in reserve ratio. We know that what is a reserve ratio? Reserve ratio is that part of deposit that all commercial banks are bound to keep a specific percentage with central bank. If central bank wants less money with commercial bank, of course central bank will increase this reserve ratio percentage. If central bank finds that there is more quantity of money in the country, now supply of money is more in the country, so what central bank will do? Central bank will enhance this ratio. So the credit base of commercial bank will decrease. Now commercial bank will having less money to give loan, leads to credit contracts. In this situation, inflation will be controlled in the country. So it's very simple. If there is an inflation in the country, to control the inflation, central bank will increase the reserve ratio and vice versa. On the other hand, if it's a deflationary situation in the country, if there is less quantity of money, then the ratio will be reduced. By reducing this ratio, now commercial bank credit base will expand and they will give more loans. Ultimately, deflation will be controlled. The fourth method of quantitative method of controlling credit in the country is credit rationing. If central bank puts limits for grant of credit, if central bank finds that commercial banks are advancing excessive loans and it will create inflation, so central bank will put restrictions on commercial bank for advancing loans. So central bank here instruct all commercial banks that don't give unproductive loan, or maybe don't, they will put the limit on giving loan. What does it mean? If in this method of controlling inflation and deflation in the country, central bank will increase the limit to control inflation in the country. On the other hand, if central bank adopts the contractionary monetary policy, the rationing limit of loans will be decreased. So guys, I hope it's clear now. What we have discussed till now, we have discussed the quantitative methods of controlling credit in the country. There are four quantitative methods which are the part of monetary policy. If the first is changes in bank rate policy, which is also called rediscount. OMO, open market operation, where central bank directly intervene into the market by selling its own bonds and securities. The third is change in reserve ratio, and the fourth is by limiting the credit by putting the restrictions on commercial bank. This way, central bank controls the credit in the country. I hope it's clear to everyone. Still you have any ambiguity? Guys, you can comment in the comment section. Inshallah, I will reply you. Take care. Allah Hafiz.